What a fantastic year 2020. We've got Brexit coming, unemployment's at the lowest rate since 1974, house prices are starting to go up, and whether you're for Brexit or against it, we're all stuck in the same system. But we do have one of the most vibrant markets here in the UK that I've ever worked in, and I've been here for, crikey, nearly 20 years and raised £1.6 billion for projects all over the world, and this is the place to be. And it's nice to see so many loyal share investors here, but as always I say, seek independent advice, because guys like us are here to try and woo you into our shares. There's a lot of people wearing out boot leather, all trying to tell you we're the best thing since sliced bread, and there's usually something better around the corner. But my job is to tell you tonight about NQ Minerals. I was here, some of the people I've seen the last trip just before Christmas. So my job is to rebuild NQ Minerals into a tier 1 base metals, gold and silver producer, and a lot has happened since I've last seen you, literally within a month. But look, this is all jingoistic stuff. We're going to save the world, EV stuff, but a lot of the stuff we do is all about sustainable environmental cleaning up of toxic waste tailings dams, and this is the first of many that NQ Minerals is going to do around the world, and we're getting a lot of institutional support for where we're going here. So pictures paint 1,000 words, so I'm going to shut up for 3 minutes. Standard old lie disclaimer stuff. But look, before I go into the presentation, what people need to understand about Hellyer and NQ and where we're going here. This Hellyer mine, when it started by Aberfoyle in the mid-80s, was the richest lead zinc mine in the world. 17 million tonnes at 16% zinc, 10% lead, 160 grams per tonne silver, and 2.5 grams gold. I mean, our gold grade is better than most gold mines in the world. And when they shut down in the early 2000s, it was an environmental, not a problem, they did a good job, but the Tasmanian government has a budget to look after the environmental aspects of this operation for the next 50 years. So by us restarting this operation and the whole process that you can see there, we're now paying royalties to the Tasmanian government. We're employing 68 people at the moment, and the plans are over the coming years to lift that to a couple of hundred people. But there are 5 projects like this in Tasmania that the Tasmanian government has asked us to do. This is a tailings retreatment operation, and the plan is to turn the lights back on at Hellyer and turn it back into a Tier 1 high-grade lead, zinc, gold, silver producer, not for 10 years, which is our mine life, but for 10, 20, 30 years. And there's been some developments since my last presentation to you, which I think are quite exciting. But right now there are 5 tailings projects similar to this in Tasmania that the Tasmanian government would like us to get involved with. And there are 2,500 tailings retreatment projects available around the world in first-class countries, and 28,000 tailings projects that need environmental cleanup. And where I'm seeing good institutional support for this is principally from the sustainable green type energy funds. And there's going to be a lot of corporate activity from where we sit globally on the stock market. So it's one of the world's leading lead zinc mines. I mean, you can read, I'm not going to read it all out. We have good cash flow, we have 10 years of it, and things are going to change fairly quickly. You've seen the video, but I think the key message on this is we have reserves and resources, and it's quite substantial. If you add all this up at in-ground value, you're talking a couple of $1 billion worth of revenue that can come out of this project over the next 10 to 12 years. This is the graph I'm very pleased of. Laser, we got laser, right. So this is the last 12 months of performance. Bearing in mind this project's only been going for 14 months. The lads have done a very good job, and our recoveries of our project, lead and zinc, have been increasing way above the original nameplate of the project, which was about here. And I can tell you we're now pretty much punching through 50% recovery on the lead and the zinc, and we expect that to get better in 2020. Production levels in tonnes of concentrate continues to rise. We're doing record quarter by quarter. Product revenues, a bit complicated, but this is all available on our website. And this is our financial performance quarter by quarter, and we've just finished quarter 4. And we expect this to continue probably for another 12 to 18 months on the uptrend before it levels out. But this project is running very profitably. Now, to restart this project from scratch would probably cost you about $500 million. To rebuild that plant alone would cost you in excess of $400 million. So NQ has invested $100 million to restart this project, with the view that it makes 30 to 40 million a year P&L plus for at least the next 10 to 12 years before we even change where we're going here. Where's it changing? This is where we're turning the lights back on. It's taken a long time to renegotiate what sits underneath Hellyer. And there'll be a presentation going up on the website shortly, but this was announced about 2 weeks ago, that we've now secured not just the surface rights and the plant and all the mining permits, we've now secured the underground reserves and resources, which sits right underneath and immediately available for development, subject to proving up a bit more and getting into production. But I mean, right now we're talking about 1.2 million tonnes at 8.6% lead, zinc, 5% lead, 0.4% copper, 96 grams, which is over 3 ounces of silver, and 1.66 grams gold. So we just bought that for $340,000. And this is where we're going to turn the lights back on at Hellyer. There is tremendous potential here to up the production and the reserves of this project. I mean, these grades here are to be tested and expanded, which will increase the reserves. These are world-class grades. This is what BHP started Broken Hill Proprietary Limited with in Australia, which is a lead zinc mine. I mean, 20 to 10 metres in the 25 to 35% lead zinc is just world-class. There are so many more of these to come, and we want to start drilling again at Hellyer with the view that we're turning the lights back on underground in the next 6 to 8 weeks. So what are we at the moment, right? So we're a lead zinc concentrate producer. We sell pyrites, which is sulfur. Gold and silver we also sell in the cons, but most of the gold and silver we're saving for year 12 to 20. And if you look at our gold and silver, we're talking 800,000 ounces of gold, 30 million ounces of silver, and that's the second phase. At the first 10 years is really lead zinc. And then we're going to add Barnes Hill to the equation, which is about 80 kilometres away. And then we'll start producing nickel, cobalt, more lead zinc, and we'll start extracting a lot of the gold and the silver from the Hellyer project that we're not recovering right now. That's why the whole concept of EV metals is sort of the front and centre of the whole play. So this is in the northern part of Tasmania, the wettest part, no bushfires. It looks a bit like Oxfordshire. That's the Hellyer mine. That's about 60 kilometres south of Burnie. And Bell Bay is a huge Cape-sized port where you can bring 250,000 tonne ships in, and that's where we're looking at putting the processing facility to open up the Barnes Hill Nickel project. Barnes Hill, we've just come out with reserves and resources at this stage. We should have a pre-feasibility study finished over the course of the next 2 quarters, and then we'll look at funding that. Now, a lot of the funding for this has come from the global bond market, the global debt market, big institutions. So to say we've raised 100 million. To start this project, it's going to take us another 100 to 200 million, depends on which way we go. And there's no shortage of appetite to fund this. But this is a small project of the other 5 that we're looking at with the Tasmanian government. So Barnes Hill, in summary, it's quite a small nickel laterite project, but it'll produce 2,500 tonnes of nickel and be one of the lowest cost nickel producers in the world. I think the next lowest cost will be Norilsk in Russia, which is actually minus dollars because they have a lot of credits on gold and silver. 200,000 tonnes of high-grade iron ore for the world markets, 22,000 ounces of gold and 500,000 ounces of silver. So this is where we kick in project number 2. But to me, the real focus now is turning the lights back on at Hellyer. Instead of making 30 to 40 million a year, our plan is within the next 2 years is to up that significantly because the grades going through that plant, which is a 1.6 million tonne a year plant, will literally go from 5% lead zinc to anything north of 15 to 20%. So that's the exciting bit. That's why I'm excited. This is all the rat bags that run the company. A lot of them are very highly qualified people around the world. Just as a bit of a map on Tasmania, this whole area here has hosted some of the largest in Australia VMS deposits. Down here is Rosebery, which has been going for 100 years, 300 million tonnes. It's still going. Hellyer, which is the highest grade lead zinc project in all of Australia, probably one of the richest in the world, sitting here. And this whole corridor here is pretty much unexplored. So this is a timeline of NQ, right? And this is quite a boring page, but it's an important one. So NQ Minerals was formed. They listed on the NEX exchange. And the reason they did that in 2015 and a half was NEX was the only exchange that would allow you to buy something bigger than yourself without a reverse takeover. So it listed on NEX. Then they bought the Hellyer Gold Project, which is lead, zinc, gold, silver. Now we're moving forward to the nickel project. And as we restructure with the big global banks, the $100 million, actually not 100, it's about 91 million worth of structured debt that sit within the system with the global banks to drop the coupon rate, the interest rate you pay, because when the risk money has gone out, so the coupon rate will drop significantly. The plan is then, and I've stated it publicly, is to move this company to a Tier 1 exchange. My preference is London, main board, but we're also in discussions talking about Toronto, but it'll be one of the two and it'll be a main board exchange. Because this is the first of a number of cleanup projects that we want to do around the world. Tasmania is our core focus and centroid, and I think it's going to be a very big company in time. So with the 4 minutes I've got left, I just want to talk about NEX. I've done main board, AIM, NEX, TSX, TSXE, NASDAQ, the whole lot. NEX is starting to work. And to me, that's the opportunity for investors. If we were on AIM or LSE, our market cap would be a lot higher. But that's the opportunity for people who want to play, in my view, the longer game. NEX is now, there's 3 or 4 trading platforms you can trade online. I know most people, like myself, prefer to trade online, but pretty much every broker trades NEX now. And I think that's the opportunity. Now, as always, seek advice, professional advice. Well, our job is to sell you boot leather. Good boot leather, I reckon, but seek advice. But I think this company's got a long way to go. So I'm 3 minutes early, which will make the Shares Magazine schedulers well happy. Are we open for questions?
Yes, David, we are, absolutely.
So maybe we're going to take a question from the floor on someone who was here last time. Yes?
David, I think you said that the mine originally closed in year 2000.
Yeah, but reopened in 10, 11 and 12 when they found fossies.
Yeah,
right?
My question was, why did it close and why did it reopen?
Right, well, back then they'd sort of run out of the high-grade ore and the metallurgical characteristics back then, they didn't want to proceed any further. And then in 2010, 11, 12, there's a company called Bass Metals bought the project and they discovered fossies and a number of other projects, but they went too early and bought the plant. And then they started mining underground at fossies, which is the opportunity for us. And they were campaign mining and processing, and they really struggled. And that stage, the resource market was pretty crappy. And I'm going to Perth next week to see the old CEO to say, right, if you had to do it again, which way would you do it? Yeah, and he didn't have revenue at the time. We've got 10 years of revenue.
And how much did you pay for the mine?
20 million. It was, well, not me. I mean, I've only been chairman since November. The acquisition price was 20 million US, and there's been 100 million in capital been spent to refurbish the mine, bring it back into production, go through the commissioning periods and get it to profitability. And the mine really started to turn profitable as a mining entity in about July, and now it's doing very, very well.
And finally, what is your current market cap, please?
It's about 30 million quid. When I joined, it was about 6. But that's because they focus more on the debt and getting the mine going, and my job's to focus on the debt and the equity market and start getting the story out. Because eventually you've got to pay back debt and equity. You don't need to pay back, but you end up with dilution. But I see so many opportunities for this, and there's a big sweet spot in the world for green money and sustainable cleanup money for projects like this.
Okay, thank you.
David, I was going to ask you, what one thing attracted you? What was the one thing that tempted you? Is it that opportunity?
Look, I've been brought in by fund managers to build companies. The fund manager's been long and wrong for a long time. I've raised £1.6 billion globally for London and global companies in the last 15 years. The last company that I came in to run that actually made money was Emperor Gold Mines in Fiji, and we were market capped at 46 on the ASX, paid a dividend every 6 months, and the longest running gold mine in the Southern Hemisphere's history. And what I liked about this was it was now making money. What they wanted was help to restructure it, help to restructure the debt and make it bigger. And I had some bandwidth. I had some bandwidth, and I like this. So, I'm non-exec chair, but I'm operating as an exec. 95 cents in my day, of my $100 day, is working on NQ. So there's some exciting things to do.
You're talking about cleaning up the spoil.
Yeah.
But all you've talked us about is getting the nickel and zinc out of it. Out of it. What's happening to the bulk of the spoil once you're finished? How are you dealing with that?
Okay. When Aberfoyle finished up and Bass, it was old tailings storage technologies. So the whole lake was like you saw in the video, it was a big tailings dam full of water. And the reason they kept it full of water was because if the tailings were exposed, then these pyrites would oxidise and you would end up with significant acid mine drainage over the whole of that part of Tasmania. So the government's sitting there with a 50-year budget to say, okay, the mining companies have left, we're paying to keep this thing flooded, but eventually, what's going to happen to this project? So technology and tailing storage methods have changed significantly. So there's a whole new tailings dam to be built to 2020 standards. The old tailings dam will be completely reclaimed, and then all of the stuff that's coming out will be neutralised. So when it goes back into the tailings dam, it won't be an environmental problem for the next 100, 500,000 years. And that's the thing. I mean, and when you look at Tasmania, there are huge tailings dams. In the old days, the miners came and raped and pillaged and made lots of money, and I've gone broke and bust, and we're all, happy-go-lucky, and then they just walk away. At the end of the day, the government's the one sitting with the environmental liability. If this dam, the water level went down, you would end up with acid mine drainage like that. The next project to here is Q River, which I didn't buy from Bass because it has a $20 million liability on it because it is putting acid mine drainage into the Tasmanian river system. We said to the Tasmanian government, happy to help, but I don't want to buy it and end up with a 20 million liability, so let's talk. And that's the issue with a lot of these tailings dams around the world, is they need cleaning up properly.
And you're using the tailings to build the dam, a sort of
you're basically mining open pit quarries within the area you're going to have, because it needs to be built of very specific compacted clay. So where you build your new tailings dam, you have to dig out and build the wall with that and then deposit the tailings within it. But the next tailings dam is 20 million tonnes, which enables all of this 12 million tonnes and any more that comes out to be stored in a very long-term safe fashion. And the bonds that we have with the Tasmanian government on here are huge now. Yes, mate.
Hi there.
How big is your deposit and how long is your license?
Okay, the license is ever-ending, right? The deposit right now is, the tailings side, which is 10-year mine life, is 12 million tonnes. So that's 1.2 million tonnes a year for 12 years. And at the moment, we're running at about 1 million tonnes a year. And around about the middle of this year, we'll go to 1.2 million tonnes, which gives us a 10-year mine life. Then we're looking at all the new higher grade stuff from underground, where we'll be looking at reopening in the next 2 years. We're already talking nearly 2 million tonnes there. So it's going to be going a long time.
Thank you.
Yeah, there's a question down the back.
Hello. Just a question about commodity prices. What do you attribute towards the recent improved price of gold? And and what factor will contribute towards its continued improvement?
Well, gold's a funny one. I mean, everyone thinks that gold's going to go up with civil strife in the Middle East. I think gold this time Yeah, and people go, yeah, it's going to $5,000 an ounce. It never does. Gold's always a safety blanket. I think a lot of the gold price rise is tension on trade wars. And you've seen an inverse effect on things like commodity prices, with the exception of iron ore. Lead, zinc is sitting at almost a yearly low. The general view from the buyers and the smelters is there's quite a lot of supply sitting in China on base metals, and then you will probably see around about the middle of the year a shortage of supply, and then things like lead and zinc will go off the clock. Things like gold and silver have weird monetary implications. No one has any idea. The one thing that no one has a clue of is what's happening to palladium. And palladium is all about catalytic converters. So precious metals is a weird market. I'm not a soothsayer on that one.
Okay, no, thank you.
But we got plenty of gold and silver, so long may it continue. I've got, is this stalled? I had 4 minutes last time.
For capturing the tailings, you showed on the graph, quarter on quarter, the increase in productivity. So
Yeah.
what are the key drivers to continue that productivity? You said over 12 to 18
Okay, at the moment
months.
we're running at 110 tonne an hour. The plant's rated at 150 tonne an hour. When they first started this project, the average recovery of lead and zinc was supposed to be about 35%. We've been pushing through 50% on the lead, which goes to the top line and the bottom line. And we've been into the 40s on the zinc, and we're now in the 50s on the zinc. The metallurgical refinement work, we're hopeful that we could get into the 60s on the lead and the zinc. So that same operating cost goes straight to the top and bottom line. Once we've stabilised those characteristics, to turn the dial up, and we've just acquired another dredge, which doubles our capacity, but the plan is to then go to 120, 130 tonnes an hour, which is about 1.2 million. And then towards the end of the year, once we stabilise that again, is to move up to around about 1.4 million tonnes a year. So those are in our scheduled budget. So increased recovery on both our key commodities, and lead's the primary one, and then gradually turning up the dial. And turning up the dial is literally just doing that. But the guys don't want to go and push it just for the sake of, I'm a hero because I got 1.2 million tonnes, when you're in fact throwing out so much commodities out the back end. So it's all quite a gradual staged approach. So that's why we're confident of our revenue and production going up quarter by quarter. We're already running at record production rates, for this quarter. And the guys are gradually just turning it up. Probably got room for one more question.
You said that you're fully funded for the site, but you said that the Hill site is pre-feasibility.
That's Barnes Hill. That's a
sorry.
pre-feas.
Yeah.
No, I didn't say we're fully funded. I said we've raised $100 million. Now, for me to go underground is a different scenario. Okay. That's probably going to cost us, in British pounds terms, around about 20 to 30 million pounds. But you can project debt that stuff now that we've got a fully operational scenario. On the Barnes Hill front, we already have term sheets from major off-takers to look at funding Barnes Hill. Anything from 100 to 200 million quid.
The other thing you said was that you were hoping to increase the number of Tasmanian employment from 68 to the hundreds. But surely one of the greatest costs is the human element.
37% of project costs in Australia is typically labour costs.
Okay, I get that, but one of the good things is to minimise labour costs.
Yeah, but to go from surface to underground,
all right. Okay.
now we've got underground contractors, but then my grade goes from 4.5% lead zinc to 16 to 20% lead zinc.
Got it. Thank you.
Right? And the reason why I want to go underground is that enables the profitability to increase, so we can weather any storm in lead zinc prices, which means the tailings project will be finished. Is that it?
Wonderful.
Sick and tired of listening to my dulcet tones? There you go.
Thanks very much indeed, David.